Hey guys, Freaky Finance here. You might see that the mask is off. We're gonna switch things up. We're gonna try to charge up the channel a bit because I got a bit more time. Um, we're gonna do a little twist of fate and do it without the mask, which is a lot easier for me to set up. So more than 100 videos in. So on mask and on leash, I might do a different series. So we'll do the deep dives, which I like to do because that's how I make my money over time. But I also like to just we'll do like an earnings thing. So um, during the earnings season, there's lots of information. Today, we're just going to do two that affect me. One's Capri and one's Valet or Vale. So we'll start with Capri because it's kind of exciting news. So we did a video on Capri about 3 years ago. Let me just check the channel. Yeah, 3 years ago. And this was basically Capri kind of rallied already. I was thinking about actually getting out of it because it's gone from to $56. And during the COVID panic, it sold off hard, like a lot of luxuries did. And it was very interesting to see the scale that's embedded in the model. You could see like SGS percent of sales shot up high because it leverages really well to the product sold, to the volume sold. And handbags are generally not as price sensitive as other goods, so they can push price a little bit easier during inflationary times. So we saw the shift to goods initially. We saw that in handbags. So handbags did really well. So anyway, there was a COVID winter, didn't, and so we sold it. Then eventually, Tapestry decided they were gonna make an offer for them, and they did, and it was just blocked last night. I was reading through the case; it's about 166 pages. I'll put it in the thing. I personally don't like DOJ binary yes no outcomes. So I won't play them ahead of time, but I will visit the company if it sells off, and I like the company, and I'm familiar with the company. Like, for some reference, you can watch the video from 2 years ago, but basically there's three brands. There's Michael Kors, which is the primary breadwinner. It's the cash cow. There's Versace, which is the more exciting one for growth, but isn't currently the big driver of cash flow. And then you have Jimmy Choo, the shoe guy. So, and to our purposes, relatively immaterial, but still could be a driver of value, especially if they want to spin it off and take advantage of the low share price and buy themselves back. Now that it's so cheap, well, arguably cheap is what we'll talk about quickly. But anyway, one of the things they did with the cash flow during the influx, because they did really good during 2021 and 2022, is that they bought back a lot of the company. They actually take it down. Like on this, I'm just looking back at my old notes, right? You can see 150,000 shares, 150 million shares outstanding. They knocked it down to 117, so they bought back a decent amount of the business over since I did the video 3 years ago. So I like that, right? That gets me excited. The case itself, the antitrust has come into fashion with an opening line of a judge, and we've seen judges make jokes like this when they're destroying shareholder value. Like if you own the stock, I would be pissed. I learned my lesson with spirit, so I was avoiding it for something like this. And then if it blows up, you can take advantage of it. So that's what I did here. So I've started a position in Capri. I'm hopefully adding as people that literally got taken out to the woodshed. They're looking at tax loss selling this October. I think there'll be some more pressure, and I can just trickle in and get familiar with it again and re-up it and try to understand what's going on with the business if it just hasn't been run as well lately because they've been distracted. The ownership hasn't responded to a slowing demand in luxury goods, which we've seen across the board. We saw it in LVMH's numbers as well. Not to the extreme that Michael Kors has saw, but and Versace for that matter. But we've still seen a weakness, especially in a company like LVMH, which has stronger brands and more cash, really just a way bigger size and scale relative to Capri, which only has 3 brands, and Michael Kors is the only one that has any full meaningful cash flow generation. But anyway, I think I'm going to put the link in here. It's 169 pages of the decision. It's interesting if you're a little bit of a geek, you have time on the weekend. I like to read things. So basically, it's like downplaying the importance of handbags as non-essential discretionary items. Because again, a lot of the people that were long the decision, like thought that it would be blocked or not blocked, were like, well, why would they block handbags? But it's not like it's going to impact the average consumer, right? Like if someone doesn't want to buy a handbag, it's too expensive, they're not going to buy a handbag. But judges disagree. They said that even though if the price is too high, ignores the fact that handbags are important to many women. So because they're important, and prices could go up if the two merged, especially in the U.S., then basically they should block it. So that was the decision. I'm paraphrasing. They go in. There's a little bit of back and forth. So there was some thought here. It's just ultimately they decided again that competition is always in the public best interest. Again, their catch-all phrase, obviously for an antitrust judge. I mean, else you wouldn't have a job. And you're always trying to get competition. So, and I'm a big believer in competition. I am surprised at the results though, because Capri's in the world is like, I mean, they have 3 brands, and Michael Kors is probably going to fall off at some point anyway, like all the House of Brands do, right? So, I don't know. To my mind, there's a lot of bags out there that you could buy. I'd like to know your thoughts on it. It's kind of a fun one. I know if you're watching this, you're probably like, oh, if you're in it, I mean, you're gonna feel an emotional response here. But I always just avoid these. When I read financials, I'm trying to get rate of change and what I like and what I don't like, what I think's priced in and not priced in. I have a very hard time with binary outcomes for court cases, right? Um, that's just something that I haven't made money on in the past, so I tend to just stay away. Capri, anyway, is starting to get cheaper again. If we're doing on a chart like this, you got to remember that it bought back, like I said, 150 million to 117 million shares outstanding. So they bought back a meaningful amount. So when you look at the share prices, know that technically it's actually pretty cheap, even back to COVID panic levels almost, right? Now it's cheap for a reason. It's not just because the case has blocked. It's also because the business hasn't responded to a slowdown in its goods. Partially, I think, because they were expecting to get bought out. Management team was. So I think you're going to see a couple of releases here. They're going to have to put up guidance again. They decided not to put up guidance in the last couple of calls because they were not expecting to need to. So they're going to do that again. I think they're going to cut employees. I know on the antitrust thing, they're like, this will keep employees employed. Oh yeah, we'll see. They're going to respond and remove employees like they always do. This is a Spirit one. I just think it's fun. So lately we've seen a lot of antitrust judges be like, yeah, this one's for you guys, the little guys who love Spirit. So this one's Spirit is a small airline, but those who love it, to those dedicated customers, Spirit, this one's for you. And the stock proceeded to go from, I think it was like 20, 15, whatever, down to whatever it is, 2 now, down to 1. It's probably approaching bankruptcy. It's already selling off its jets. And it can't compete because it can't keep its pilots, because it can't pay its pilots what the other ones are already paying. So again, another horrible decision. You guys love Spirit so much, we're not going to let them merge with JetBlue, and Spirit's just going to go away, or maybe get saved for pennies on the dollar with Frontier, and it does the same thing anyway. So I just love. If you read some of the cases, you're just like, you came up with a different decision than I would. But anyway, that's just random thoughts as a Spirit chart showing it as slowly approaching bankruptcy. But that one's for you guys, the little guys who love Spirit. And again, I think it's just partially it's like a legal thing. Who doesn't understand businesses? Like a judge never ran a business, right? Maybe ran a legal practice, but I don't know. Anyway, I could go on. This is just a data point. Louis Vuitton's also it's been a hardcore grower, so the fact that it's been stagnant and declining organically year over year, and this one, LVMH puts a lot of marketing behind its brands, so they've actually started seeing decline as well. So that tells you the space is under pressure, which usually gets me excited because usually these things mean revert over time, as long as the brand isn't broken. Michael Kors, the thing I have to worry about, the thing I'm not jumping in. Like I did buy some because when I see something 50% off, I get a bit excited. But what I'm excited for is the next call. I kind of get to see like what's their plan now, and I also want to know. Like I looked at the inventory. I'm like, okay, are they ahead of? Because we saw the operating margin go down. Well, here, just really quickly. Again, the three segments. Michael Kors, the main one we look at. We see the declines across the board, but again, the main cash cow is Michael Kors. And you can see the operating margin, Michael Kors, go from 22% in 2023 fiscal year to 18% in 2024 fiscal year. Capri has a March 2024 year end. So anyway, we've seen the margins come in, and we've seen it come in hard, and usually that's them pushing the product and discounting to move inventory. So what we need to see now is inventory in hand to protect the brand. So we've seen inventories actually go down quite a bit, about in line with sales decline, actually a little bit ahead of it. So that's a good thing. That means they're chewing through it, and then they should be able to protect the brand. So I like to buy retailers when they've already seen margin contraction on their product line. And it's across the board, so it tells me it's not one brand specifically. It tells me the entire sector, and that would again be implied by LVMH's thing that Capri's not doing anything wrong. Maybe they should have adapted already to a slowdown that they've seen, which I think they haven't because of the takeout deal. But it tells me that's likely across the board. So it's not like Capri, like Michael Kors itself, the brand is suffering more than LVMH's are. I mean, it's probably true here based on the numbers, but at least it tells me that it's not just Michael Kors, that it's not just a specific brand. So that's something I always worry about when I jump back into something, because I haven't looked at Capri for over a year now, a year and a half. In terms of the earnings potential, if we go back to last decade, the company has been putting up decent numbers: $3 in EPS, $4 in EPS. Like, it's been floating there forever. COVID happened, we saw the panic, and actually led to an awesome buying opportunity in 2021, 2022. And what it did with the cash flow, you can see the shares outstanding goes from 152 to 117. So they bought back a meaningful amount themselves, and that's what I like to see. So at the current time, you're getting a price that's relatively cheap. Partially because of the emotional response to the judge, but also because the business has suffered over the last year and management hasn't done anything about it. So anyway, that's enough for Capri. If you want to look at the split, again, it's similar to the video. You've seen accessories about 50% of the business, so that's your handbags. Then you have footwear as well and apparel. So just kind of, we can go into more detail. I'll probably familiarize myself with it more after Q1, especially if they give guidance. It'll help me and see what their strategy is as a going alone company. Or are they going to appeal and hope they win? Maybe that's not enough price probably right now. It's always something, right? But we don't know. And I have to go through, I'm not a legal person, so going through this case, even if I read it 5 times, I wouldn't have a clue whether they'd be successful in appeal or not, right? So I have to understand the drivers of the business for the long run here. At a price that got cut in half, which is always exciting. We won't go through the annual report today. Vale is one that I own. So here's a Vale. This is one we've written one section. I also did a video on this one. Maybe I'll put that in the chat as well. We're not going to do edits on these type of videos. These are just going to be off the cuff. Whatever I say, I say. We'll see how it goes. It's a different style. Obviously, I love this stuff, so I'm just going to get into it. So Vale is really nice. So you get 11% yield on a business. That's basically a price taker iron ore. So a lot of iron ore is produced in Brazil, and they basically ship it to China. Oversimplifying the business, but that's like a real. If you want to understand the drivers, you're a price taker, so your share price will go up and down with the price of iron, and then you also have freight. So you need to understand when freight markets go up and down. That'll also impact the business quite a bit because iron's heavy. So to get those two things, it'll probably be okay. The thing I like about Vale is its size is so big that it in itself will it will impact the price of iron over time. So that's what I like about Vale, is that it's so big and has such a low cost to produce that it's like a last man standing in a way, like similar to what we discussed on the oil side. Very similar idea in my thought process, and I'm ultimately hoping to pick it up under 10. It ticked it quickly in August, and I bought some more. I'm hoping to do that again, but we'll see. The business is strong, and it also buys back a decent amount of itself over time when the business is really strong. So that's on top of 11% yield in Divvy. So I like to put this one in my RRSP. I'm Canadian, so that's just what I do with higher dividend, especially foreign dividend companies. I put in my RRSP. That's just how I structure things. Interest income also goes in the RRSP. Maybe I'll do a video on that at some point. It's tax efficient over time. Things that I've learned. So anyway, Vale is what I own. What I like to look for, again, with the commodity industry, is I actually like to look for capex declining from the big boys. So Vale's a big boy in iron ore. So I like to see them responding to their own price cut, because if they're responding, I know all the other guys are responding as well. Usually. Not always true, but most of them would be pulling back capex as well, because basically future you decide to allocate capital is if the price is good, you're going to allocate more capital. It's like a price signal, and you chase the price, then your production goes up, and then the price comes down because there's more of it. Supply demand lag on a capex cycle. So very similar to oil and gas. So same idea here. We're seeing the capex response, and now we've seen it. You can see it: iron ore, the nickel, total energy. So total capex down 5, growth capex is down 20. So there's capex for sustaining the production, and there's capex for future growth, and we've seen declines in both in terms of rate of change. So that's what I like. That's what I want to see when I'm looking at buying into a commodity. So I'm glad that it's showing up now because it tells me I'm not dumb early. So, and you never know when you're a price taker what the price is going to do in the short run. You just have to know over the long run what do you expect to happen over time and what's currently going on. So we know right now that China has been suffering relative to its longer term growth rate and its expected growth rate. So, and China was a big user of iron ore. So we know that lower demand is currently priced in. And then we also know that the price right now is also terrible. And then we see that in the price signal right now with the biggest producers cutting back on future growth plans, which will support the price over the longer term. So we don't know between now and next year how cheap Vale gets, but we know longer term, like 2 or 3 years, I bet you I get a nice, like, this thing goes to 10 to 15, like $10 where I'm in, to $15 on nothing. Like, it's just a little bit of improvement and this thing will shoot up. And I've seen this a few times. So I like Vale here, and the business model. I don't know any other iron ore producers, so I just like it. We did a video on this when we talked about the dam, all the Brazilian dams. That's something like if you're an ESG investor, you would obviously consider, and the reparation payments involved there. In terms of the EBITDA bridge, again, what I like to look at is what's currently getting priced in. So we've seen a material decline in price taking. Because the price has fallen down so much, and you see how much that affects the EBITDA. Like when the prices are high, Vale's cranking out cash flow. When the prices are not good, you can see the pullback, and the share price reacts to that very well. So, really, it's just I just treat it like buy a commodity. I like to buy it when the commodity is cheap. The business doesn't look very good, right? We're seeing year-over-year declines, but we're seeing the capex pullback. We're seeing the price signal start to work to support the price longer term again. Very like just a cyclical play. Hopefully that makes sense. Again, this is just another way to show the decline in the realized price. So last quarter, Q3, they realized 105. This quarter, they realized 90.6. Or same thing, down 13. Whatever you want to use, right? But you can see that the lower price is getting priced in for longer, which is always good from my point of view. And again, you can see the price has really been relatively flat for the last 5 years. So, like you see it go up and down quite a bit, especially during this part right here, the inflationary part. But we've seen it kind of mean revert back down, and eventually I expect this trend to slow. Like it will go up over time. It's just the nature of the beast and commodities. Usually, as long as the demand is there, which I think it is over time, right? Because right now we have a relatively slowing economy, partially man-made because so many countries increase interest rates. And we also saw China not stimulate enough for the last 4 years, right? So we also know that China relatively weak in terms of a demand pull. So basically, you're just, I think, we're getting something that could be interesting. Like, doesn't mean you get back down to 90, right? But it does mean that eventually it is probably too cheap, like too much curtailment in production in the future if it gets too cheap for too much longer. So that's just my opinions. There's literally people that specialize in just focusing on iron ore, which would be a boring job. I like to dance around. In terms of these are quarterly numbers. I just like to see what Vale does over time. And again, they bought back shares over the last since 2021. The higher prices, they had 5 billion shares, standing now down to 4.2. So they bought back a decent amount, not as much on a 1 year because what happens, like every company that we follow, they like to buy back themselves when they have more cash flow, and usually that's at a time when their shares are higher. But anyway, you can see it's gone down 4,200 versus 4,300 or 4,400. So bought back a decent amount, not enough to get excited, but again, you're getting 11% divvy on the side while you're waiting. So, we didn't talk about copper at all. When the video I do, because that is something, and nickel is also exciting for EVs. And Vale is has good production there, nickel in Canada. Sudbury, but yeah, rambling a bit. What else is there? I mean, I think I touched on the two main ones for today. There's always more to go through. I'm a big geek when it comes to this stuff. I'd like to know your thoughts. If there's any iron ore companies, or if you want me to go into Capri more detail again, I'd rather wait until I see the first quarter and see what they say and see if they give guidance. Maybe they don't still. Um, but it's interesting to see how these stocks react to these news items, right? Just the magnitude of the moves too, right? It's just crazy. But anyway, I'd like to know your thoughts on Capri and Vale, and have a great rest of your weekend.